The power of compounding, your money's best friend. Did you know that a single dollar invested today could potentially double in value within a decade? This magical growth is the power of compounding. By earning returns on your initial investment and then reinvesting those returns, your money multiplies exponentially over time. This snowball effect is the key to building long-term wealth and achieving your financial goals. Why you need an investment portfolio. Building a brighter future. An investment portfolio is your personal roadmap to financial security. It's how you make your money work for you, growing your savings and securing your future. Whether it's saving for retirement, buying a dream home, or funding your children's education, a well-structured investment portfolio can help you reach your goals faster and with less stress. Demystifying the portfolio. What exactly is it? Simply put, an investment portfolio is a collection of assets you own. This can include stocks, bonds, mutual funds, real estate, and more. Think of it as a basket holding different types of investments, each playing a role in achieving your financial objectives. Smart Cash can help you build a diversified portfolio tailored to your specific needs. Step 1. Defining your financial goals. Where do you want to go? This is the foundation of your financial journey. Before you even think about investing, you need a clear picture of your financial destination. It's like planning a road trip. You wouldn't start driving without knowing where you're headed. What are your short-term and long-term goals? Short-term goals might include paying off debt, building an emergency fund, or saving for a vacation. Long-term goals could be buying a home, starting a business, or planning for retirement. Do you want to retire early? Buy a second home? These are significant milestones that require careful planning and saving. Save for your child's college education? Education costs are rising, and starting early can make a big difference. Clearly defining your goals will guide your investment strategy and help you choose the right investments. Knowing what you want to achieve allows you to tailor your approach and make informed decisions. Smart Cash offers financial planning tools that can help you define these goals and set realistic timelines. These tools provide a structured way to track your progress and adjust your plans as needed. Setting milestones along the way can keep you motivated and on track. Regularly reviewing your goals and progress ensures that you stay aligned with your financial objectives. It's also important to involve your family or a trusted advisor in your planning process. Their support and insights can provide valuable perspectives and help you stay committed to your goals. Remember, achieving your financial goals is a journey, not a sprint. Celebrate your achievements along the way, no matter how small they may seem. Each step forward is progress. With clear goals, a solid plan, and the right tools, you can navigate your financial journey with confidence. Start today and take control of your financial future. Step 2. Understanding risk tolerance. How much can you handle? Not all investments are created equal. Some carry higher risks than others. Your risk tolerance refers to your comfort level with the possibility of losing money on your investments. Are you comfortable with high-risk, high-reward investments? Or do you prefer a more conservative approach? Understanding your risk tolerance is crucial in selecting investments that align with your comfort level. Smart Cash provides risk assessment questionnaires to help you determine your risk profile. Step 3. The power of diversification. Don't put all your eggs in one basket. Diversification is the cornerstone of a sound investment strategy. It involves spreading your money across different asset classes, industries, and geographical regions. By diversifying, you reduce the impact of any single investment performing poorly on your overall portfolio. Smart Cash offers a wide range of investment options to help you diversify your portfolio effectively. Step 4. Choosing the right asset mix. Finding your perfect balance. The asset allocation of your portfolio refers to the percentage of your investments allocated to different asset classes like stocks, bonds, and cash. Each of these asset classes has its own risk and return characteristics, and the right mix can help you achieve your financial goals while managing risk. The ideal asset mix depends on factors like your financial goals, risk tolerance, and time horizon. Your financial goals might include saving for retirement, buying a home, or funding your children's education. A longer time horizon allows for a more aggressive allocation to stocks, as you have more time to ride out market fluctuations and benefit from potential higher returns. While a shorter time horizon might necessitate a more conservative approach with a larger bond allocation. Bonds tend to be less volatile than stocks and can provide a steady income stream, which is important if you need to access your money soon. Smart Cash provides personalized asset allocation recommendations based on your individual circumstances. By analyzing your financial situation, goals, and risk tolerance, Smart Cash can suggest an asset mix that aligns with your needs. This can help you stay on track to meet your financial objectives while managing risk effectively. Remember, the right asset mix is not static. It should be reviewed and adjusted periodically to reflect changes in your financial situation, goals, and market conditions. Regularly rebalancing your portfolio ensures that it remains aligned with your investment strategy and risk tolerance. This proactive approach can help you navigate the complexities of investing and achieve long-term financial success. Step 5. Monitoring and rebalancing, keeping your portfolio on track. Building an investment portfolio isn't a set-it-and-forget-it endeavor. It's a dynamic process that requires ongoing attention and care. It requires regular monitoring and adjustments to ensure it stays aligned with your goals and risk tolerance. This means periodically reviewing your investments to see how they are performing and making necessary changes. Market fluctuations can cause your portfolio's asset allocation to drift, which can impact your overall investment strategy. For instance, if stocks perform well, they might take up a larger portion of your portfolio than intended, increasing your risk exposure. This may require rebalancing, selling some assets and buying others, to restore your desired asset mix. Rebalancing helps you maintain the risk level you are comfortable with and ensures that your portfolio remains diversified. Smart Cash offers portfolio tracking tools and alerts to help you stay on top of your investments and make informed rebalancing decisions. These tools can notify you when your portfolio drifts from your target allocation, making it easier to take timely action. Additionally, Smart Cash provides insights and recommendations based on market trends and your personal investment goals. This can help you make more informed decisions about when and how to rebalance your portfolio. Regular monitoring and rebalancing are crucial for long-term investment success. By staying proactive and using tools like Smart Cash, you can keep your portfolio on track and aligned with your financial objectives. Remember, investing is a journey, not a destination. Continuous monitoring and rebalancing ensure that your portfolio evolves with your changing needs and market conditions, helping you achieve your financial goals. Smart Cash, your partner in building wealth. Building a successful investment portfolio requires knowledge, discipline, and a little help from the right tools. Smart Cash offers a comprehensive suite of resources and features to guide you through every step of the process. From defining your financial goals to monitoring your investments, Smart Cash empowers you to take control of your financial future and build a brighter tomorrow.